So where to for the Australian dollar? Well, after the Q4 GDP print once again undershot expectations, markets have increasingly priced in the prospect of the RBA looking to ease monetary policy through the course of 2019. So markets have anticipated or are anticipating that the central bank will continue its process of gradually reducing monetary policy, i.e. interest rates domestically, in order to facilitate and extend the macroeconomic environment. Now, of course, we're talking about an undershoot in Q4 of just one tick in terms of the quarterly GDP, but if you were to annualize that Q4 number, then we are sub 1% in terms of economic activity. And when you look at some of the legacy issues which are weighing on the growth trajectory in Australia, you can understand why there is some degree of reticence to be overtly optimistic about the Australian story, because of course we are seeing consumer expenditure under a little bit of pressure. We continue to see the real estate market moving lower in many jurisdictions, and of course the degree of leverage in the consumer sector is elevated and right up there towards the top of the global developed markets. So clearly the central bank are mindful of some of those issues going forward. But we shouldn't lose sight of the fact that the expansion that we've seen into the end of last year still marks the 31st straight quarter of growth in the Australian economy. We haven't seen annual growth, not on an annualized, but an annual growth basis. We've only seen GDP sliding below 1.5% on 3 separate occasions since the start of the millennium. So I think we shouldn't lose sight of the fact that the economy has proved remarkably resilient to the pitfalls that have been befalling the global economy over the course of the last, or best part of the last 20 years. So there are some longer-term boosts to the domestic sector. And I think if we have a slightly more benign outlook in terms of global trade trends through 2019 and into 2020, some of those headwinds that have been really undermining the Australian dollar and Australian dollar sentiment, I think will start to dissipate. Now, our base case view at CIBC has been for a consistent period that we wouldn't and did not expect the Chinese economy to materially decelerate. It is slowing, yes, but that's part of the policy remit of the central authorities in China. But we're not expecting a material deceleration and an unyieldy macroeconomic outcome in China. There is plenty of latitude to ease fiscally to try and moderate the global backdrop as well as the domestic considerations. But also we would expect the trade tensions that have been really writ large between the US and China over the course of the last few months to gradually dissipate as we move through into the second quarter. So if you start to take away some of those global trade concerns, which of course have been proxied or leveraged through the Australian dollar, then I think you start to take away some of the negativity in terms of the Australian story. And I think also if you take the view that if we are going to see some pressure in terms of real estate markets in a couple of the big cities in Australia, but if that isn't going to precipitate itself into an aggressive and broad-based sell-off, if we aren't expecting the RBA to be considering tightening policy aggressively, then there is no reason to think that those real estate concerns will really proliferate. Then I think there is a case to be made that if we are going to see global trade tensions starting to ease, the market perhaps becoming less aggressive in terms of pricing significant easing from the RBA. I think indeed we're more likely to see monetary policy inertia over the next 12 months than an aggressive policy of rate cuts. Then I think the retreat in the Australian dollar back to the 70 threshold, I think does provide some medium run value. I think there is a scope and prospect of Australia looking much better relative to the US as the Federal Reserve start to rein in its own policy tightening and considering rate cuts in 2020, and as the market has to reconsider the discounting of RBA rate cuts, then I think there is a material case for the Australian dollar looking much better bid. And so these levels back at around this 70 threshold provide good medium run opportunities to buy cheap Australian dollars.